Um, okay. Please, sorry for that short delay. So we'll continue. So what I'm expecting now on this Euro USD, sorry, on GPUSD is that I'm expecting market to give us what a short-term buy, right? Then it will consolidate. Why Euro USD will be maybe making some retracement. Then before we see an up movement. So where I'm expecting the buy to happen is this. We have within this resistance level, right? This level of resistance, which is around here. So we'll have this support level, but at the same time we have this lower support level right here. All right, we have this lower support level. So this is my major point of interest for a buy program right here. So let me change the color of this. Okay, this will be my major point of interest, but at the same time I will also be monitoring this low. If it give me a confirmation that I will buy, right? This is what I'm expecting on this particular pair. All right, then there's another pair before we go to good and BTC. There's another pair I will look into again. All right, so there's another pair we'll look into. So which is um this pair. All right, this pair. So it has the same mood, just like GPPUSD. So we have early consolidation right here. So let me change this to accumulation. So just like Wyckoff accumulation, then this movement is giving us in form of Wyckoff, it will be what a distribution phase to the upside before a reversal. But if you're using AMD, it will be accumulation manipulation, then before a distribution. So I have two POY. I'm expecting this cell to have where I'm expecting this cell to play out. So one of the POI is this internal structure area. So the reason I'm expecting this area is first, we have one lower low right here. So let me explain break structure first. Here we have a break structure, then I will explain little thing about mitigation, not all. So the first thing here we understand is that market gave us a short-term buy movement right here, right? Then broke this low. Right here we have another short-term buy. This candle right here mitigate this with wick, right? It mitigates it with wick. At least it touched the high resistance level. At the same time, this one also mitigate this. This one also mitigate this. So this make this level, these two levels, a clean area to look for sell. So we have this first as your resistance level or as your POI. Then we have this upper POI, which is inducement. This high right here is primary inducement. So since it is primary inducement, I'm expecting market to what induce it before looking for a sell program. So I'm expecting market to induce it before a sell program. Now without mitigation, I won't pick this area as my POI. Okay, so that means I'm picking this area because of this type of what mitigation. So this is what my POI. So I'm expecting a manipulation to the upside right here. Then a sell program. If we have a CRT reversal around here, perfect, right? CRT reversal or rejection type of reversal plus intent on lower time frame, then we look for a sell program. All right, we look for a sell program right here. So this is one of the other pair I'm also monitoring for today to sell in New York session. All right, so that is the pair I'm monitoring. I'm also monitoring this, which is the US 30. For a while now, we have been stuck in this consolidation range. Okay, we have been stuck in this consolidation range. So I'm expecting manipulation to the downside into this zone before I look for the sell. All right, I'm expecting manipulation to the downside, but currently, if I'm to look for a move, I'll wait for a market to break this low before I look for a sell. Else, it can continue buying to the upside. Okay, since this pair is clearly bullish. So just like that, we have here as a POI. Now here, if you want to refine this point of interest to like on 5 minutes time frame, so what do you do when you come to this time frame? The first thing you note is what right here we have a proper mitigation. We have a proper mitigation right here. There's no proper mitigation. The last proper mitigation we have is stopped around here. Okay, so that means this area can also be used as point of interest. But if you want to refine it, you'll have your point of interest like this. Okay, so you'll refine it just like this. This will be your POI after refining it. And in this sell, I won't kind of be disturb myself to sell right here. So that is not my major view. So since that is not my major view, I won't be disturb myself to sell, except maybe market come induce this high, or which I don't expect that which I don't think market will do. If it will induce this high, the next thing I expect of price is at least if there's what is CRT reversal around here, then I can look for sell, or we can look for sell in general. Then for a sell program into this zone before we look for a buy, just like the sell that is currently happening on Euro USD. So the first thing, if you are selling this, the major target you are taking is this. So once market now get to this, once market now get to this low, you are taking your first TP out. If you take this entry around here or around here, you are taking your first profit around here, because this is what your secondary inducement. So market can continue dropping. Your second target will be here, all right? After your first target, your second target can be here before a possible what buy continuation. So that is that. Now we'll go back to gold, which is one major pair I'm monitoring also. So on gold from higher time frame, let's just remove all this noise. Okay, from daily time frame, we just start from daily time frame. So the first thing you understand is this: on daily time frame, after market grab these two liquidity right here, these two lows, a break of structure here, inducement, break of structure to the upside again. All right, BOS right here. So after this BOS, we have right here, we have engulfing to the upside, engulfing to the upside. So the next thing is what you look at, what you look for classic support or resistance level. In terms of classic support or resistance level, you will have it around here. Okay, just a level that market has tested multiple times. That's what I mean. So this level market has tested it multiple times. So what do I mean tested it multiple times? We see price tested it here, tested it here. On lower time frame, tested it here, tested it here also, here, here, here. All right, this is example of what a support level that I also use at least as confluence to mark your point of interest. To mark your point of interest. So when you have it like this, since that area is your support level or area that market has broken now, it become a support level. So on this forward time frame, what do you do? If you remove that level, since we can see that level now, I will just remove it now. So that means we'll have a clear support level right here. Okay, so if you want to refine this support level, it will give you more idea that you will expect price around here. All right, this become your support, your next support level. Okay, so if this become your next support level, then you mark out your imbalance, which is this. So you have not gotten your point of interest right here. We have base candle right here. So you have now refined your point of interest even without going to lower time frame to refine it based on mitigation. So without even mitigation, using support and resistance level or where market has tested multiple times, you have just gotten your point of interest where market will likely what buy from. Okay, so this is my point of interest now, even without refinement. Even on this time frame, if you don't want to even use daily, when you mark this level out, you understand that this level price has tested it multiple times. Tested it up here, tested it here, tested it here, tested it down, broke above it right here, tested it here, here also, here, broke above it, broke below it, tested it around here 3 times. So this is what a complete resistance or support level. So since market has broken above it, it become a support level to support price up. So you have your POY just right here around that zone. So that means if I'm looking for a buy program, I will be looking for my buy program around here. On 1 hour time frame, when you come to 1 hour time frame, it become a base candle, right? It become a base candle. And we have a short-term break of structure right here to the downside. Okay, we have a short-term break of structure to the downside right here. Before that, even on 4 hour time frame, where price is selling from currently, all right, where price is selling currently from, I was expecting that sell, but it didn't get to my actual point of interest. You have this QML level right here. Okay, this QML level right here, the body where the body stopped, not the wick. That was where I was expecting this sell to happen. If the sell happened, just a short sell for a pullback before a buy continuation. All right, before a buy continuation. So this is my expectation on gold. I'm expecting to sell into this zone before a buy program. So if market will not sell from here, then you say, okay, maybe market will not likely get to here. Where will we likely buy from? It can also buy from this support level. Okay, so that means you have two POY right here, this and this POY and this POY. So what you need here now is what? Is CRT reversal or rejection plus break of structure. Then you look for a buy program to the upside. So on this time frame, it make more sense, okay, that you wait for price around here. Okay, it make more sense that you wait for price around here. So that is just what I expect on gold because we are bullish. We are bullish from the last live session we did on YouTube here on this gold. We discussed this buy program. So we marked two POI where we likely be buying from, which is this where price is currently at now, and this somewhere around here, something like this. So market did not get to this, and he started buying from here. So we have these two POI where we are buying from. So these are the two POI we are buying gold from now. So these are the two POI we are buying gold from. So let's look at BTC also. This is another pair I'm monitoring for the day. From our last live session, we marked this area where market can actually give us a short-term buy. And yesterday, in personal trading, I actually caught a short-term buy around here, but later on market hit my break-even and induced this low. Now right here we have a break of structure to the upside, a short-term break of structure to the upside, and here we have some mitigation right here. So since we have this mitigation right here from the last live session we did, I said we can look for point of interest around here. So if you want to refine it, you can go to lower time frame to refine that, but if we refine it, we'll check it later on. So at the same time, we also have some mitigation right here. Okay, some mitigation right here. So that led for this buy where I was buying. Okay, where I was buying at this area. I was actually targeting these two highs right here, and which is this movement right here. So the only thing is that I got my entry wrong around this area. So this was my entry, that was yesterday. So right here now market is buying. Okay, and it has gotten to my target. If I'm to buy, market has gotten to my target. So the thing, since it has gotten to target, that means it can sell. It can decide to sell, continue selling. But if you decide to continue selling from here, I'm not going to sell because it didn't what? My trading plan or my strategy, it didn't play out here. So I won't be taking this sell. I won't be taking this sell right here. It's because my target is already has already been hit right here, even if I didn't get the entry. So now when you come to this time frame, if you want to refine this area, if market decide to buy now, if you want to refine this area, you can go to 15 minutes or you can go to 15 minutes or let's say 5 minutes time frame. Okay, let's use 15 minutes first for the refinement. So when you come here, the first thing you always mark out is the last high or the last major high market broke, which is this. Okay, once you know this high out, then we'll have some minor structures or range structure right here. I have some range structure right here. Since we have this range structure, did this area did they mitigate price enough? Answer is these two mitigate price quite okay. All right, so that means we have one POY right here. Okay, so but let's not use it like that. So you have one POY right here. Let's just use this. The refined POY. Then you have this short high as liquidity. Okay, you have that short high as liquidity. But at the same time, we also have this area. We'll have this area as our next POY. There is what? A short-term pullback right here, like on 5 minutes time frame. And that short-term pullback right here created this little area. You see that? So that is why sometimes mitigation refinement is not okay. Because if you want to refine this now, you have 2 POY. Okay, you have 2 POY. But if you don't want to refine it, you can just select the whole of this zone and select something like this. Though it will be wide, but that would be better instead of having 2 POY just within one structure range. So if you have 2 here plus this, that's making it 3. So you just better you do it this way. You have 1, this as 1 POY and this as second POY. So you have just 2 POY perfectly aligned right there. So right, that is it. If you want to refine it, will be if you want to refine this area, it will be 2 POY. So this is what you have as your point of what? Interest. That's what you have as your point of interest right there. So since we have checked these two pairs now, and there's no setup currently on this pairs. So if there's setup, if we have CRT reversal, we look for that entry before the session ends. Okay. Let's look at other pairs. All right. other pairs that are not USD pairs. Let's see if we can see entry. Now this is another pair I have checked before. So I have my POY or refined POY right here. So if market will not sell from here around where price is currently after taking out this short-term high, if market will not sell from here, I'm waiting for price to sell from here. So I have just one POY around this level, just one POY. So this is imbalance, just right below the POY imbalance. Then we have liquidity right here, or double top, or you can call it inducement, liquidity, or you call it inducement right there. So okay, we have discussed this pair already. USD JPY don't have any current bias except being bearish, but I'm not monitoring to sell. Okay, this is another pair I was actually looking for a sell program. So this is one trade I took yesterday, though I didn't update you guys, but it was just POY plus intent then entry on lower time frame. Quite perfect. Our market still later on visited that POY. So let me share that. Share the description of that POY. So you can see the POY just right here. How I marked it. The two POY I used yesterday. So this is the first, that is the primary POY. This is the second POY, secondary POY. And the reason is pure mitigation. So just clear mitigation. Market came back for this mitigation. Sold off. The first mitigation pushed price to sell. The first sell move, push it to sell the second times. Came back again to this and sold off. So this is the trade. Right. Then I also have this. Okay. Okay. This was a trade, but I also deem it to be what, a low probability setup, because there's no break of structure. So I deem this to be a low probability setup. But since market now has broken structure, so let's discuss this trade. So this is why I didn't update it across any of my platform. So since market has now broken structure, we'll discuss it, and I also update it across my platform for us to look for entry on lower time frame for market to take out this low. So we have a break of structure here to the downside. So after a break of structure, market broke structure to the upside right here. It broke structure to the upside right here. The major break of structure, the major high. Then we have the higher high, the higher low, then the higher high right here. So here we have now a break of structure to the downside. Okay, a break of structure to the downside right here. Since we have this break of structure, the next we expect is what, a sell program. So because before that sell program, let's look at H4. You can clearly see this CRT reversal from a resistance level. So even without refinement, you can mark out your POY just like this. Now since we have this early consolidation right here, we have a manipulation to the upside. Then we're expecting a distribution to the downside. Since we're expecting this distribution, then we are looking for what, entry or a level to sell. So we note the last high market broke, which is this, and a short-term high that market also broke here, which is this. Okay, this area is out of the equation. Since this area is out of the equation, then we have this POY right here. As our primary POI. Now, I would have marked it just like this, but that is too wide, alright? So we'll have it like this. We go and refine it even on 1 minute time frame to see if you can have a smaller stop loss inducement right here. This high induced this right here, short-term high right here. Okay. There's no complete mitigation around here also, so that means we still have this area as our point of interest. I'll go back to higher time frame. I've gotten minor break of structure right here. So if I'm taking this trade, this would be my point of interest where we sell from. So you can have it just like this. You can place your stop loss just right above this high, which is around 5 pips, or let's say 6 pips. You make it, let's say 6 pips here, right? 6 pips, just 1:7. That won't be a bad trade, all right? So you can take this after this target, but before you target this low, you can target this low first. This can be your first target, this low that market is currently creating. That can be your first target after that, before you target this low. Then if market continue the bearish flow from higher time frame, okay, from higher time frame, you can expect market to maybe induce this low right here, induce this low and this low possibly. You can take your full target, your full TP around here. You can take your full target right here, because this area, these two lows are mitigated already, and this one has come to sweep this liquidity, making of them a clear target for market to take out. Okay, so this can be your full target right here. So once you take out this target, then that means they will likely, since this is where we'll have last mitigation, this can be your POY where market can likely buy again. Okay, this can be your POY where market can likely buy again. So this is one setup. So I will update it later on across my platform after the live session. Across it, I will update it for you all before price get to that level. So you can see this type of buy setup that's forming now on this pair. The first in market, look at this low, kind of like a break of structure if you look at it from higher time frame. Okay, from daily time frame, you have it like this. Market traded into an imbalance right here, reject the imbalance, broke this low. Okay, since market now broke this low, this is kind of like a break of structure. Though one major thing I always check is this engulfing. All right, engulfing. I always want market to engulf that low it breaks. So it didn't engulf this low. So this is what a 50-50 type of what break of structure, except fundamental analysis is supporting this sell program. Okay, so if fundamental analysis is not supporting this sell program, I can't just be selling just because I have market sweep this low. It can be what liquidity grab, and from there you have a break of structure to the upside right here, around here. So this low, clearly a liquidity, and from there we have a mitigation right here. So this area can be a POY from higher time frame, which you can go to lower time frame to refine it. Okay, you have this break of structure. So if market get to this level, it can decide to buy or give us a pullback before we sell continuation. Since this pair is clearly bearish, you can see it fully bearish in the long term. All right. So it's clearly bearish, And from the last quote report we have on AUD, AUD gained strength slightly compared to CHEF. CHEF is not super strong as of last week. All right, CHEF is not super strong. So since CHEF is not super strong, we can have some retracement right here. So when you come to, let's use 4-hour time frame first. So when you come to 4-hour time frame, we have a short-term liquidity grab right here. You can see this double bottom right here, which is kind of like a liquidity pool. So market grab it right here. After this grabbing of this liquidity, if I'm to buy, I expected what? A CRT reversal right here. I expected what? A CRT reversal right here. But market did not do that. So this type of trade, I'll just stay out of this type of trade, since it didn't what obey any basic rules of reversal. Let's look at another pair. Okay, this is one pair that I marked out, that I'm looking for what? A buy program. Yesterday I marked this area as another POI. Then why this is primary POI, secondary POI, this support level. So after the market came, reacted from it, though it used week to go through below it, but the body failed to close below it, which is an actual support level. What support level is meant to do? Support level is to hold price that the body will not close below it, right? Which is what market did right here. So since we have this now, this support level, what am I expecting? So let me just delete this. We'll have a break of structure to the outside right here. A high, a low. This high is engulfed, but this high did not engulf this former high. So this low is inducement low, based on the rules of inducement. Right, that low is clearly an inducement low. So that means you can have your POI just right below it. So if you have your POI just right below it, the next is what? You go for what? Mitigation. And right here we have a clear mitigation, but we have two POI just right here. So we have one here, we have one POI right there, and we also have another one right here. So if you want to refine this POI even further, you can go to like a minute time frame if you want to take the instant entry without waiting for confirmation. And here we have, okay, you see this imbalance right here, right? Inverted imbalance right there. You can have it as your what? Your next point of interest. Then when you scale into this time frame even further, you can have this as another imbalance right here. You see that right here. So you can have this area as your next POI. So this is a level whereby you are waiting for a confirmation for a buy program. We have a lower low, a lower high, lower low, lower high. Okay. Mitigation. So this you has mitigated now. Okay, so since this high has already been mitigated now, the next thing is what? Either you wait for maybe SMS, which is this high to be taken out, then you start looking for a buy program, or you wait for market to take out this low as liquidity, because this looks like a double bottom. So you can have it like this. So if you have it like that, you can adjust this to something like this. So you wait for what? A confirmation around here for a buy program, but the confirmation I would advise you use what? 5 minutes time frame. Okay, I will advise you use 5 minutes time frame, so which is best. So what you are waiting for now is this. After this buy program now, if market, since there's what a proper mitigation now, which can lead for sell. Okay, so since this can lead for sell, it has mitigated this area now, it can lead for sell. That means this low is not protected yet. So you just wait for what? SMS to the upside for this low to fail. Then that means a break of structure to the upside before you start looking for buy, or you wait for market to what? Absorb this low, break structure, then you buy. That's just what you want to. That's what you want to be. That's what you do. Or the same thing here: a break or structure, a buy program. Now the reason why you're waiting for those confirmation is because those are not the only POY we have. We also have this POY just right here. Okay, so we have about 3 POY so far. So we have about 3 POY so far. So you have this, you have this. So these are just what you would do for the day. So that is it. Since you have this right here, you can look for buy from here. Okay. Question: is it advisable for a newbie trader to check for setup on different pairs or just stick to few? Okay, that is a good question. Now, one thing is this. Let's just use a. So let's use a. So as a trader, the first thing you note as a trader is your strategy. So having a working strategy. You first have a working strategy. Now, when you have a working strategy, the next is your trading plan. So in your trading plan, one of the things you include in your trading plan or as part of your trading plan is the pairs you'll be trading. The pairs you'll be trading. So in this pair you'll be trading, the first thing you do is what? You backtest your strategy. Right? Now, backtesting your strategy doesn't mean at that point that you have understood your strategy 100%. So what you do at this point, backtesting means you are just trying to pick out some model that work or that resonates with yourself or that work with you. So that is the first thing you do. So in doing this, maybe you backtest 6 pairs or 7 pairs. All right. Within these 6 or 7 pairs, notice that okay, Euro USD is not there, GBP USD is not there. You remove those pairs. So you pick the ones that align with your strategy. If it's 4 that align with your strategy, then you do it. You start trading those 4 pairs. So if it's maybe Euro card, perfect. You start what? Trading those strategies on Euro card, on USD card. If it's maybe Canadian dollar pairs that works with your strategy best, you do that. Not because maybe everybody's trading Euro USD, you continue trading Euro USD, or you stick to Euro USD and GP USD. Just because everybody's trading it, then you limit yourself to those only 2 pairs, and at the same time, those pairs are not aligning with your strategy. You will find it hard to grow at that point. So in general, what I'm saying is that if the pairs that works for you is other pairs outside GPUSD, AeroUSD, Gold, BTC. You focus on those pairs until you start growing. Maybe you have another model that also works, then you add it to the model that worked before. Then at that point, maybe you add extra pairs, maybe Gold or other pairs, right? So without you understanding your strategy, it will be hard for you. That is the first thing. So once you have your strategy, you backtest it on across multiple pairs, all right, not only your pairs, across multiple pairs, or only the pairs that your mentor trade. Once you are backtested across multiple pairs, the next thing now you do again is you select the pairs that works best. So after selecting the pairs that work best, then you stick to those pairs. So that is what you do. So you're welcome. So let's look at maybe Aero USD and GPUSD. If you can see some scalping setup on them on lower time frame. Let's see Aero USD on 15 minutes time frame. So the first thing we have here is these two now has already mitigate each other. So I'll assume these two, they have mitigate each other. So you can see it here on this 30 minutes time frame. Support to support resistance to this resistance level. So it has tapped into this resistance level. So a complete mitigation has happened around here now. Since there's a complete mitigation around here, the next is this becoming your major structural low. So since you have this as your major structural low, you scale into maybe 5 minutes time frame, you mark out this, right? You mark out this. After marking out this on this time frame, so you note the current early consolidation we have. So the current early consolidation we have right here. I just show you. So we have this short-term break of structure to the upside right here. Then we have this purely mitigated around here. These are all mitigated. So you can expect market to come and induce this high right here on this 5 minutes time frame to induce this high. Then this become your next POI. So which you will wait for confirmation. So if I'm to buy, I'll buy from this level. Okay, I'll buy from this level at least for these two to mitigate each other right here. So I'll have something like this. But this is just a short-term scalping setup. So you have this 1:3, but I won't advise it because it's just a short setup. So you have this. After that, if market continue buying, all right, that means you expect it to induce this high and possibly induce this and get to this range before it sell program again. So this can be a good trade if it happen like that. Okay, so this can be a good trade right here. But what we are waiting for is this sell. So we are waiting for this level right here, then this level. So we have this two POI for a sell program. So that's what we are waiting for sell. Then let's look at ROUS USD, the same thing. Okay. Okay, this is already selling. Okay, mitigation. Okay, this is already selling, so we just have to wait for the buy, which is around this level. That's just the major thing we do there. Okay, now this is another perfect pair you can monitor again. So this is early consolidation or accumulation phase. Market is accumulating at this point. So you can call it accumulation. Okay. So we have this accumulation right here. Sorry. Okay, we'll continue. So we have this short-term accumulation right here. Since we have this short accumulation, we can expect a manipulation, possibly was to the downside, or if it happened to the upside, no problem. So the first thing is this: we have a short-term break of structure to the upside right here. So we have M15 imbalance. So we just monitor where this manipulation will lead to, right? If it will go up or it will go down. Then on 1 hour time frame, did you have any proper mitigation? Answer is possibly no. So I have a break of structure upside right here. Then we have this minor internal structure right here. So this area can be my POI. So we just wait for any side market manipulate to, then we know where we target as our TP. So if we target this area or if we target this area, so that's just it. Any side market just face, then we know what we do at this point. So that is all. So the major trade we are monitoring for today now is one is GPUSD, 1, 2 USD Chef, US 30. I don't have any clear analysis on it currently. So another one is GPB card, and AUD Chef. AUD Chef. Okay, this. So we'll have these pairs so far that we can look for entry. Okay, we're not monitoring AUD Chef. Was it AUD Chef? Let me check something. That pair we analyzed earlier on using GP Chef. It is not. Okay, it was New Zealand Chef. Okay. So we have these pairs we are monitoring for the day now. This is not among. So we have 1, 2, 3, 4. Right, 4 pairs. This is for what? A buy program. This is sell program, a buy to sell program. This, okay, market has already taken out this low. Let's wait. If you can see confirmation on this trade, then we'll look for entry. Market now has gotten to this low. has gotten to our target for the sell short-term sell program. If it will give us confirmation, we'll buy from here. So if we trade below this low, no need of buying. So wait for market. Intent high. Right, we have intent high right here. So if you give us confirmation, we buy. We enter from here. Target at this high plus this level. So that will be our full target. So let's see if we can get entry on this today. Why this is sell, but this might not happen today because before getting to this level, it might take price some time. Except there is what a lot of volatility in the market. So that is it. And another thing is that we have some news today, right? We have some news today on USD around 3 p.m. on USD around 3 p.m. Okay, that is the major news we have today on USD. So since that is the only major news we have, so we shouldn't be worried. We shouldn't be worried on this pair. So we have this one trade. Please note I said this is our first target. This is second target. So if you take this trade, apply risk management as always. So this is not kind of like a financial advice, all right? This is trading, so which works best when you are what following the rules, your trading plan, risk management. These two, they are very very important. So this, this, and this buy. That is all we have for the day. You see this? It's currently selling now. So this is why I said we'll just wait for this sell. If it happen around here, instead of looking for that buy, just wait for this to sell. Because those are kind of risky trade. So we'll monitor this time frame. Let's just wait. If market break this high before taking out this low, we buy. We buy to this level and to this upper level right there, right here. So the reason why I'm expecting a buy now, if market break this, is what we have a CRT reversal on 1 hour time frame. Okay, since we have this 1 hour time frame CRT, a break of structure to this high, we confirm that buy program. It will confirm that buy program. So we just need market to break this high and engulf this support level. Then I buy. That just a simple trade we can take there. So that is all for today's live program. The trade that I'm monitoring, or we take together. So these are the trade we are monitoring. I'm currently, since there's no live trade, all right, let's just learn something, all right. So what we're learning now is idea of support and resistance, or support resistance plus rejection. So how it works, how support and resistance works in terms of rejection and all, which you can add as part of your trading plan or as your model, or one model that you will backtest first before you add it to your trading plan. So you must backtest it first before adding it. So the first thing is a simple support and resistance. So that means you look for two candles, buy and sell candle or sell and buy candle. So something like this. This is a support level. Something like this. This is a resistance level. Right? This is a resistance level. Here is support level. A support level, resistance level. Okay, so having this support and resistance level, understanding this basic support and resistance level, there are other things you need to understand or how to use them. So the first thing on how to use support and resistance level is rejection from a support or a resistance level. So take for example, um, let's use daily time frame to get this better. So take for example here, this support level right here. So once market now trade into this daily support level, so you want market to reject it. So as market is rejecting it, then you scale into what, 1 hour time frame or 4 hour time frame for break of structure or engulfing to the upside. So when you come to 1 hour time frame, what did market do around that support level right here, which is this day, which was on Friday of last 2 weeks. So you expect market now to break this high, which is this. So since market now reject that support level, daily support level, then broke structure to the upside, and it engulfed this level. So this creates a new wave in price now, or a new wave for you to expect what a bullish continuation. So you come down to maybe H4 support level or H4 resistance level. So when you come down to this time frame, look at this. You have a fresh support level right here. Okay, then market came to this level, this other resistance level, this other support level to buy. But now let me explain another type of support or resistance level you will learn. So after having this basic support level, we have what called buy support level or open close support level. So open close support level means as market close right here, it opened for this buy candle also. So this become another word support level. So we have this as another support level. So once we're able to understand this open close support level, so that means at every sell candles, there's what resistance level. At every buy candle, there's what a support level. Right? A support level. But you're not going to be using support and resistance level only. So you add it to structure, you add it to other model to refine it, or so that it will give you the best output or the best answer, all right, or the best solution. So what you do now is this. That means this level can be used as a support level. So you notice as price trade into it, the reject price on this 4-hour time frame. 4-hour time frame rejecting 4-hour time frame support level. So you can scale into what 15 minutes or 30 minutes time frame to look for what a break of structure. So on this time frame, you didn't see any structure here. You can go to 15 minutes time frame around that level, which is this market broke structure the upside here to the upside. Market broke structure here. Since we have this break of structure, we have market create a higher high, a higher low, a higher high, then market induce this low. And we have imbalance right here. So this can be an entry or entry level which you can use to buy good from here, getting to the upside. Now understand, you are not only trading this support level just because you are trading it. No, the reason why you are buying, the reason why you are looking for this buy program is one, we have H4 early consolidation or accumulation phase right here. So market has been accumulating around this level for a while. So since market has been accumulating around this level for a while, right? So what you do, let's go back to chart. Since market has been accumulating around this level for a while, what you do here is you are targeting this high. This will be your what? Your first target. So after this, your first target, this will be another target. Okay. So you have this 1, 2, or first and second target. So this will be your target. So for this support level to work well, you need a reason why price need to push price. When this level need to push price higher. So that is one major reason. And another thing is what? Fundamental analysis. Fundamental analysis is what? Pushing price higher because institutions are closing their sell position. So when they are closing their sell position, even if they are not adding buy position yet, that shows that they are tired of the sell movement. So that means over time they start adding buy position. So around this time they were closing what? Their sell position. So after closing sell position, the next is what? They will start adding a buy position. So which they started adding, which was on Monday around here. So once we're able to catch this entry, your target will be this high. So that is one way of using support and resistance level. You use it with what? Other model. Use it with other model. So the same thing here. Now let's look at this also here. what the market do here? We have early consolidation here also. Okay, we have early consolidation here also. Then we have a resistance level here. Okay, now why did I call this level a resistance level? We have a buy and a sell candle. So that is what? A normal support and resistance level. So you go to what? 15 minutes or 30 minutes time frame to wait for what? A break of structure around that level. So around that level, you are waiting for what? You are looking for a break of structure. So market create a higher high, a higher low, then a higher high. So market broke this low. So after breaking this low, you have a short-term imbalance right here. You have a short-term imbalance right here, which you can use to sell. Okay, so we are selling this because we have consolidation right here, in manipulation to the upside, then is sell. Okay, you can have this as what is sell program. All right, now another thing is this: as market was even selling on 1 hour time frame, it did something different, it created another model. All right, it created another early consolidation here again. Okay, so because of this early consolidation, if you remember at that time, I was also looking for this buy program right here. So why? Because of this early consolidation. So this can lead to what? A buy program before the sell continue. So that's why sometimes it's not advisable to always target the external liquidity. The first thing you target is possibly what? The nearest liquidity you have, which is kind of like inducement, which is this low, before targeting the external liquidity. So you have that right there. So after that, we have another buy program, because the whole of this area is another what? Consolidation. So you see how market form consolidation upon consolidation. After accumulating, it will what? Give movement to the downside, then distribute to the upside, then give another movement to the downside, consolidate, which is accumulation, manipulate to the downside, then distribute to the upside. You see that around here also, though it was not too obvious. This right here, it looks like a consolidation, but it's not too obvious. We have one right here, which I marked a consolidation. So after the consolidation, the next thing market gave was a rejection. Look at it right here. It rejected H4 plus CRT reversal right here. Okay, a CRT reversal, you go to 15 minutes time, you look for what? Break of structure around here. So the reason why I didn't take the first entry is because there's no break of structure around here. So if there was, let's say, M15 high, I would have looked for a buy program. So the only break of structure we have was on M5, or was it even on M5? Yeah, it was around here. So and when it broke this level, market just continued buying, it didn't retreat. So I didn't take this entry right here. So we discussed this entry in the last live session, I believe so. So this is clear how you use support and resistance. So another way of using support and resistance is what? A broken support level or a broken resistance level. So take for example on daily time frame. So this one, I mostly use it on higher time frame, not on lower time frame, higher time frame. So a broken support level or a broken resistance level. So take for example here. Initially it was before it was a resistance level. Market broke below, broke above this level, continue creating a range structure, retrace back now, come back to this level, which is now a new support level. So that means resistance turn support at this point. Resistance turn support. So this level now can be used for price to buy. So you have this as a support level. As market trade into it, the next you wait 1 hour time frame break of structure. All right. So when you come to 1 hour time frame, since there's what? A model for a buy program, which is this early consolidation around here. on H4 time frame. So you wait for market to break structure to the upside, which is around here. So after this short-term break of structure, you can wait for a buy program. So, but initially that day, I was waiting for market to break this high, because this is what H4 high, which is a better confluence, right? Breaking this high is risky, because if market was selling, it decided to create, maybe as it was buying, it create early consolidation, another consolidation around here. It can decide to use that to sell. Okay, so but as market now break this high, which is minor break of structure, which some people call change of character, all right, then you start looking for a buy program to the upside. Start looking for a buy program to the upside. The same thing here on daily time frame. We have a new resistance turn support. This level is a resistance level. Okay, so it was supposed to push price down to make a lower low, but market broke above it, so it become now a support level. This become a support level. So as market trade into it on 1 hour time frame, what are you looking for? A break of structure on 1 hour time frame, which is this. So after this break of structure to the upside, boom, wait for retracement, then proper mitigation around here. None of this low mitigate price well. So since there's no proper mitigation, you can just wait for H4 support level, which is this or this. As market rejects this one, then you look for entry on lower time frame, though it didn't give a solid entry on that lower time frame, which is supposed to be this. It didn't give that solid entry, then a buy program. So you see how we're using support level with basic accumulation, manipulation, and distribution. So you can use this as part of your model, or as part of your trading model as a trader. So that is one way I analyze my market. So let's take, for example, if market from another consolidation around here on H4 or on 1 hour time frame. If it's on H4, perfect. If it's on 1 hour time frame, also perfect. And from the first analysis we did, we mark out this level as our support level, okay? Because this right here is a resistance level. So market broke above it, so it can become a support level now to push price higher. But on daily time frame, we can also do this. Okay, so we have here as initial resistance level. Okay, initial resistance level. So if market reject this level now, broke structure on 1 hour time frame, yeah, it can lead for a short-term buy program. Okay, but I won't advise for that type only, just to be trading support and resistance. It's simple, all right? It's simple and effective. But when you give it when you add some confluence to it, let's say maybe support and resistance and MD, or support and resistance with market maker model, or support and resistance with something that can add more confluence to it. At that point, when it breaks structure, you know that this is a break of structure, not a liquidity grab. At that time, it will help you filter inducement from break of structure, because a lot of people do make that mistake. When market breaks structure to the downside, you start selling. Absolutely not. That's not how market works. Okay, so they always create the liquidity, which is kind of a pool, a liquidity pool, or a trap, because we have almost about 3 or 4 types of liquidity. We have pools. That means as market was buying, all right, the 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 buyers were in total control of the market. So that means there's what pool of price. So that means sellers need to reprice at those levels. So they'll come to what reprice. If it's imbalance like this, they'll come and reprice. So that means this level now a liquidity pool. So market can come to this level before going up. That's one. And as it's coming, it can break structure to the downside. So as it break these structures, if you call it a break of structure, at that point you make a mistake, because you start looking for sell. Whereas market just came to what reprice itself before continuing buying. Another one is when market did not have strength to continue the sell. So take for example this high. Market can decide to what induce this high because it doesn't have that strength to continue this sell. So it will look for what liquidity in terms of what either stop losses or buy limits. Or sorry, buy stops. Either stop losses, people that are selling good here, they will set the stop loss above this high. Okay, so market would look for this high to what start to grab some liquidity before selling. Okay, so this can be a liquidity pool. So example of it is this. So around here, what did market do? It came, it absorbed this liquidity and dropped down. So after absorbing this liquidity before it started buying. So this is a liquidity pool. Okay, so this high can be what? A liquidity pool. Another one is what? Inducement. Inducement. So this in type of inducement is when market knows that they will buy, all right? They know that they will buy, and you yourself, you're also expecting that buy to happen. So both of you, that is smart money, and we, the retail traders, are expecting market to what? To buy. For example, right here, you're expecting this buy to happen. Okay. Now, since you're expecting this buy to happen, they know that okay, most people after creating this short high, this low, now most people will be looking for buy at this low. Now, when you have that mindset that okay, a lot of people will be looking for buy at this low, then you yourself will now rethink that okay, that means since people will be looking for buy at this low, liquidity will be resting below it. So what do? You expect market to what? Induce it before the buy continue. You expect market to induce it before the buy continue. So as market induce it, give you entry on this around this level before you buy. This is what we call inducement. This is what we call inducement. Then we also have the type whereby okay, we have multiple lows around this level. So and those multiple lows are mitigating each other. So take for example this low and this low, they did a perfect what? Week to week mitigation. So since both of them did a perfect week to week mitigation, those two lows or these two lows can become liquidity pool. Okay. Why? Because since it is like this, a lot of people are expecting market to come and what? Respect this level. Why? Because they will be assuming that these lows are double bottom. So because why how they trade it is this. When market give them a double bottom, let's say for example this is a low, this is another low. So when they see something like double bottom, okay, when they see something like a double bottom, they'll think that is a what? A support level. So market go up, down, went up again. So if market come to this level, they'll be expecting market to buy from this level. Okay, so what market will do is this. Since that is what a lot of traders does, market will come down, induce them, and buy. Just like the same type of this same scenario. The only difference is that this one is two lows, while this is one. Okay, a lot of people now are expecting a buy from here. Market will just come, induce them, and go up. Okay, so this is another type of liquidity. But you can, as a trader, you can just overlook some of this liquidity if you are yet to master them. All right, you just trade simple, classic, simple and basic idea of support and resistance with AMD or with a strategy that you know already that is working for you. Okay, it can be Elliott wave, it can be trend line, anyone. All right, so you just have to include support and resistance to it. You just have to include support and resistance. So once you include support and resistance, it will make more sense. Okay, because there are a lot of people now that okay, they want to take this entry, where would they buy or where would they look for this buy? Some of them can just decide to use trend line. So if you use trend line here, it look like it won't work. But if you use trend line, let's say um, around somewhere here, okay, it can work. All right, first touch, second touch, third touch, buy. All right, that is a trend line, but I don't kind of like use it again or include it in my trading at all. All right, I don't use it or I don't include it in my trading. But if if that is what gives you confidence as a trader or what boosts your confidence, yes, you can use it. All right, but for me, I don't use it. This is what a trend line break. It broke this trend line on this H4. It broke this trend line around here with body, though it didn't break it well enough. But after breaking of this trend line, it can lead to what a pullback before a bullish continuation. So this can help you now to expect this buy program. The same thing on daily time frame. This can help you to anticipate a buy program around here. So since you have this trend line, you can expect what a buy from here to the upside. Some people can also use it. You know, a lot of people use trend line differently. Some people can use it like this, as market come here, buy. A lot of people use it differently. So, but in general, what you are doing is just simple. You mark out your support level, which is around here. Then you mark out the last mitigation of it, which is around here. Then you wait for market to give you entry, then you buy. All right. So let's look at a GPP card and see what it's doing currently. If we see entry on it, GPP card. Okay. So we have the liquidity graph right here. Then let's just wait for market to break this current high right here and engulf it. Not only to break it, engulfing it is very important. All right. Break it and engulf it. Then we look for buy. So if market do that, this will be our entry. If market do that, but we just exercise patient around how many pips stop loss? 5 or 6 pips. 6 pips stop loss. So we just wait for this. Then we can target this as our first target. Then that's it. We can target this as our first target before the second target around here, which is around 1:10. So 1:6 or approximately 1:7. That is it. A simple trade we can take. New Zealand card. Okay. We break this high. It has already taken out this now, so there's no reason why we should be looking for buy currently on this pair. Okay, so that is all for today's live session. So in summary, what we have here now before we end the session will be I'll be ending the session in the next 9 minutes. So I'll be ending the session in 9 minutes from now. 9 minutes from now. So we have this for a sell program. Wait for confirmation here. Then we'll have this. Okay, it looked like it has given us a confirmation. Yes, it has broken structure. So let's just wait for market to engulf it. Then we look for entry here for a buy move. So we'll have New Zealand for a sell, USD for a sell, but we need confirmation from these particular POIs. Then GPP card for a buy from here, any of these two POI or this lower level for a buy program. Then we'll have this for a buy program. We're not interested in the sell currently, so we're only interested in a buy for market to give us entry for a buy program. So that's what we're expecting of price. We're expecting a buy program from price. So I will update this trade in the channel. Then good, the same thing. We're expecting a buy from here, but I won't update good today. So I'll just wait for market to do what it want to do here first before I update it. So that is it. So I will update this 1, 2. Right. So I will update these 2 trades in the channel. So that is all for today's live session. Market is here to engulf this. So if you have a question, you can ask your question before we call it a day for a day. Okay, since there's no question, we'll be calling it a day from here now. Okay, so see you guys in our next live session on Thursday. So good luck and good trading.